Now here, we would like to have a common ground of our trading first. Why would you like to do trading? Why would you like to start trading at the first place? And why you choose to do trading? I believe that everyone in the room have the same targets, which you would like to have passive income from the trading. Am I right? And it will be the best that if you can use the robot trading to achieve passive income and financial freedom together, like what Fong Kiat said for the retirement. Okay, if this is your target as well, right, type a yes into the chat box. Now, why we are talking this is because I know a lot of you guys are looking for this thing, the secret sauce to be profitable in trading forever. And in this workshop, I will explain to you how does the robot trading work and how you can leverage on robot to achieve your target. Basically, the robot itself is operate based on these three super duper important elements. And this is the place that you should start to take note, yeah. Now, the three things that you must learn to be profitable forever in trading. Anything of this you're not doing well, hancho. Okay, we call it as crispy. First, entry. You need to perfect your entry, how to enter the market, and how to use the robot to execute it correctly. Second, exit. How you are going to close your trade that is in profit, how you're going to recover your trade that is in losses, exit part. And number three, risk management. How can you make sure that your strategy is a long-term profitable strategy? And the path to become a financial freedom as a trader is very much that you are starting from a foundation. And I believe that a lot of you guys agree, if you want to reach to a big target, a big goal, you need to have a solid foundation. What does it mean by solid foundation? When you are get started totally new, right? You are get started with a clear goal in mind. What you want to achieve? Financial freedom, right? You would like to achieve passive income from trading, from retirement, for anything else. Right? Everyone might have slightly different, but your goal is the same. That's why you are here. You come in to learn about the basic. You build all your basic first. Your foundation has been very strong, solid. On top of this basic, we build. You start to do manual trading. Correct? This is your path. And from basic manual trading, upgrade it further to become semi-auto trading. Right? You start to combine your strategy with the robot together, mix to get a partially automated strategy. Lastly, once you are so good in combining this thing, then you start to know how to adjust the robot setting to be even at the top, which is full auto trading. And this is the place that whereby you understand the most, right? Which is robot trading. It is over here. By the end of the workshop, you will acquire a skill to confidently use the robot to trade for you for your freedom, not just for the time, but also for the money, for the financial as well. So are you guys, some of you guys are fully new, right? Totally new in trading. So I think that I must go through a bit on basic first. Okay, what is the market doing? How to read the market in the most simplest way. Now, to read the market is pretty much just two things. The market itself is just in the cycle of trending market, ranging market, trending market, ranging market. Now, there are certain terms that I'm going to use, which is like jargon, support and resistance, SNR, TPSL. Now, these are some of the terms that I already mentioned over here. So you guys can look through this section in the membership website later, right? If this thing does not understand, or you can ask in the chat box also lah. Now, what is trending market and what is ranging market? Simple way, trending one-sided, ranging sideways. Put in the picture, look something like this. Now, trending market, it is like this, all right? This is what we call as uptrend market. When the market moves higher and higher and higher, all right? This is called uptrend. And this is called as simple downtrend market. And when it's uptrend market, why is uptrend? It's because there is more buyer. Hence, in the uptrend, we just focus to buy only. Meaning that when you see the market move up, you just buy only. And when you see the market come down like this, it's more seller. Hence, you focus to sell only. And with that said, by doing in this way, you are focusing on one single direction. Let me repeat again. You are just focusing on trading one single direction. When it's uptrend, you buy only. When it's downtrend, you only sell. And when market moves sideways, this is what I call as ranging. That means that have equal amount of buyer and seller in the market. Buyer at the bottom, of course, seller at the top. So come down, you only buy. Come up, you only sell. Simple concept. And how does the market actually work? How does the cycle repeat? Let me put into this condition. I want you guys to think the market like a pressure tank. And this pressure tank itself is sort of like working like this. At first, when the market gets started, right, this tank is like highly pressurized tank. And this tank itself have a lot of liquid inside, right? So what happened on this liquid? It is highly pressure. Upside being pressure, downside being pressure. And what happened that you take out the tank and shake it? What will happen? The water inside just control. Alright? Nothing will happen. And there are little kids, they take the stone, throw to that tank. What will happen? Nothing happen as well. Ding dong. Right? And more people throw the stone to this tank. And this is what we call it as the fundamental. Or some people will call this as a supply and demand. Meaning that they take the stone, keep right? Keep throwing the tank again. And nothing happened. But until one time, people throw so much to the tank, and finally, it started to have a crack. And when there is a crack, there is a leakage, right? And when there's a leakage, what will happen? There are some people with good nose, they will smell, hey, this is something wrong. And then they're going to take one more big stone, just nicely hit at this crack. And this is what we call as the final news. It can be big news, it can be small news, it can be just a Twitter post. And then as soon as I just hit that spot, what will happen? Boom. You have a crack, right? You have a hole there. And this hole is start to have water leak out. We call that as big rush out. And that means that the market from initially very stable now become not stable and become trending market. And when this thing happen, what will happen in the market? Two situations. When there's a crack, when there's a hole, right? Water will rush out a bit lah. And right now, there are more and more people take more stone, throw into this hole. And when more news throw in there, what will happen? The crack will become even larger hole. And then even big water come out, right? And larger rush out. And what happened after that? Because this kind of thing happens so heavily, right? A lot of water pump up. In the end, the tank will become empty. And when the tank is empty, the water is where? The water is all outside. And right now with this empty tank is what we call this as empty supply demand. There is no more supply and demand in the market. It's just back to a new market condition. Okay, a new market condition. Stable again. And what happened after that is that the market need to refill back. Now there is another situation whereby when this crack just happened, there are politicians, lawmakers, or some other agents that would not want this thing to happen. All right. And this type of people say that no, we must recover this as fast as possible. This is the hole. And quickly they put a tap on it, close it. And this is an additional new news, or we call it as their government recovery plan. What is the latest example of this? SVB, bank collapse. As soon as bank collapse, you have seen a lot of news come out like this one. All right, keep ham at the bank. Oh, your financial crisis will happen. That thing happened. That thing happened. And if that thing really happened, right, this thing will come out. All people die. But government quickly come out, say that no, we're gonna recover you, close the hole, pump in the money back. Now put into a simple cycle. How does the market really work? Is that it started with a fully pressurized tank whereby all the water is inside with a normal supply and demand. Okay. After that, because people keep said a bad thing about this, or Elon Musk said this, that thing, it have a crack. And when there's a crack, people throw more stone into it. It have either that it goes to big rush out, right? Or it goes to recovery, been recovered by policymaker. And these two end up with two different cases. When we come out initially, this stage, number one, the market is more on ranging. Second stage, when there is a crack, there's a leakage. This is what we call this as a start to have breakout. Some people can smell this, some people cannot. All right, later I'm going to teach you guys how to use robot to do it. But after this, it's either that it is continuously have more news throw in to make a bigger hole so that it become breakout and then really trending, or it become recovered by the government, breakout and then back again. Okay, or some people call it as a fake breakout. But anyway, whenever this thing has been happened, pain is there. Right, new market condition is there. It cannot be avoided. Some people have noticed this. Just that this effect is even stronger, right? The top one. Because the trend is already been initiated. Now, put into a diagram, this is how it should look like. And now you guys should write this down. Okay? Not say write, draw this together in the paper. Because when you guys learn this thing, right, you say easy, this thing I learned before already. But there are a lot of, we call it as the tiny details before it happened. Okay, the real tiny details. Now the details including how the market works is that first thing first, it always started with a ranging market. Okay, it always started with a ranging market like this, sideways. How should I consider that it is ranging? We have to take a portion of it after a certain series, right? Which is like 1, 2, 3. It could be top side 1, 2, 3 or bottom side 1, 2, 3. It doesn't matter. The purpose is that we want to make sure that it have a longer sequences of ranging, meaning that hit the top 3 times or hit the bottom 3 times, and it's minimum 3 times. Okay, minimum 3 times. And we only consider that this is a ranging market. Next thing, how to consider leakage. Now, usually leakage happen before the breakout one. So the leakage is this part. On a ranging market that is confirmed, let's say that this 1, 2, 3, right? It's confirmed to be ranging. Moving forward, this area, if the ranging from bottom side goes up and it ranging at the top, when it's ranging at the top, that actually a hint that the buyer is buying at a higher price. Instead of buyer here, right now, buyer shift to a higher price to buy. Why? Because they smell the leakage and they would like to push it further, ham it. And as soon as the buyer strong enough, they'll push over. This is what we call this as a breakout. And breakout, likely there is a pullback. And after the pullback, okay, it may come back to this initial. This is This line at the top is what we call this as a resistance. Bottom is where we call it as a support. After it come back to here, it start to move out. Alright, this is what I call it as uptrend initiated. After this uptrend initiated, it will be slow back down into a certain area one. Okay, this is where we call this as initially have a ranging. After ranging, it will be either at the top or at the bottom. If at the top, it will goes up, come down, then it start to have ranging. After that, moving forward, it only been slowed down again. From ranging to trending, from trending back to ranging again. Now, the point is that where to enter and where to exit. The entry part, there are two type of people. One, doesn't matter, one aggressive, all-in type. As soon as it goes up, I buy first. Okay, this is A type people, all in. This is conservative, safe people. No. I need to confirm that it goes up, pull back first, at a better price, only I enter. Nothing right or wrong, it's a choice of life. Then there's entry. How about exit? How to exit? Commonly, people exit based on when it comes to ranging, okay, reach back to this bottom part, second time, it start to exit already. This is called as basic way to exit, right? The most basic way to exit. Now, for me, my way of exit is that I doesn't care. I'm the aggressive type. I will exit as soon as the candlestick is huge. Meaning that you guys have been trading, you guys should see that normally, right, the market candlestick is like small one. And I will exit immediately when there is a huge candlestick that goes up. And I'll exit here. Alright. And later that it come down. Right? Like you guys can see this. Regardless what time frame is the same thing one. As long as you can see a big candlestick that goes up, it will comes down one. So that is where I exit. And this ranging will happen again, right? You see, ranging, if range at the top, it will goes up. That is what likely to happen. In summary, ranging, trending, ranging, trending. How it works? 1, 2, 3. Range at the top, then goes out. Okay, the top here, we don't know how long that it can go. It can go 1, 2, 3, then range at the top for the next 4 to 5 days one. Or it can be range 1, 2, 3, and then there is many more. It can be 4, 5, 6, 7, 8. Doesn't matter. Because the market needs time to digest. Everyone needs time to digest as well. That's why 1, 2, 3 is just a minimum. There's no maximum. And then leakage can be also minimum as well. Just wait. After the breakout, it will go for trending, back to ranging again. Okay, 1, 2, 3, 1, 2, 3 already. Then it can range at the bottom. Then it comes down. Back to ranging again. Okay, so that is how the market cycle. How to make money from trading? In short, you buy, it goes up, profit. You sell, it goes down, you profit. And the thing is that when you trade, right, when you guys trade, right, this is unlike a stock market. The market that we trade in the workshop today is called as CFD. CFD is a type of market that whereby you can just buy and sell at the same time, and you do not need to buy first before you sell. You can just buy and sell at the same time. But I always recommend that if you want to buy on it. You want to sell, then sell on it, so that you clear what you are doing. You buy, it goes up, your profit loss. Sell, goes down, your profit loss. Opposite direction, then lose money loss. Alright, as simple as that. And there is one concept super important. You have to learn how to close a trade in order to realize a profit. You can't just buy and hold. This thing does not work here. Alright, in short term, if you want to do trading for profit, you have to close the trade. If it goes up, you close here, you make money. If it comes down, close here, you make losses. Same thing to here. Right here you make money, at the top you make losses. Where to get started? Now for those that totally new, this is a checklist for you guys. Don't go beyond here. Okay, this is simplest to the hardest market to trade for beginners already. Not even have Bitcoin. All right. Cryptocurrency not recommended for beginners. There are so many technical things behind. Just start from something that's more mature, such as S&P 500, gold, Euro USD, GBP USD, and also crude oil. Later, we're going to review some of the trade market that you guys execute most of the time. And then from there, we will start the simulation and see that what are the market that you guys love to trade a lot. All right. Then we focus on that market more. Now, robot trading framework SOP. How to accurately use the robot. What is the method to do it? Now, let me go to the drawing board. Now, this thing itself is what we call as the robot trading SOP, all right? And it's heavily have a concept behind. So whenever you use the robot, right, the flow works something like this. Now, it gets started at the first whereby you choose your market, right? And from the market itself, you choose your direction. Now, direction here, okay, the direction here later you have learned just now, right? The market basically evolved in two directions only. Number one is based on, we call it as a ranging type. Number two is based on trending type. Now, ranging, trending, both have their own strategy in it. For ranging, right, the most common strategy that you guys might heard before is support and resistance. Second is RSI, basic one. For trending, the popular one is moving average. For not so popular, but you might heard of it, is stochastic. Some people call it as KDJ indicator. And this actually forms the most important part of it. And we can summarize this, right? At the first section here, Kevin is asking, right, how about index like US, Russell 2000? Is this okay for beginners? The reason why I would like to lay out this thing is because I would like to clarify that market can be any market, okay? And whenever it's suitable for beginner or not, is whenever you can fully utilize this kind of flow or not. Based on the market that you choose, and then we filter, get to know what is the right direction of the market. And then we decide that right now the market is ranging or trending. Then you choose left side or right side. And after this, you choose, let's say that you choose the RSI strategy. After you choose this thing, the next step is to do, we call this as a back test and optimization in the robot. We need to know what are the right RSI value to use at this market. Just like Radha is asking, right? What is the best time frame? Then this is the part that you have to do back test and optimization to verify which are the time frame that is the best. Over here, you will get your best setting. I will teach you exactly how to get a best setting so that regardless what market, what condition it is, you all can trade it. And moving forward after this is all about trade it, execute it. Okay. Now, this is the whole flow, and throughout the session of today, we will slowly fill out the pictures and then you can see the flow, how does each and every single component of it work. All right, now Okay, so by now, let's start with the first strategy. And I would like to start with something that easier since a lot of you guys are beginner, right? How many of you heard of moving average? All right, if you heard of it before, type in MA. I mean, you heard of it, you use it before, type in MA. If this is the first time, type in 1 in the chat box, right? Type in 1 if this is your first time. So I know how fast that I can go through this topic. Okay, got some of you guys is 1. Very good. Okay, since some of you guys are 1, right? Then I will begin with a few of topics that is easier understand. Okay, of course I won't be the person that talk about theory. Okay, I will talk about the main thing that you have to know on it. Now, a simple background first. Moving average or MA. MA stands for the average price in the past few days. And you guys can take a screenshot of this thing first. Then later we go to the trading software and then we clearly see that how does this thing work? How to use MA? A simple way to know this thing, right, is that moving average is the average of the price in the past few days. Days are the design of moving average is used in days. And moving average itself is to detect that the market is keep moving above or below the average on a daily basis by default, by design. Okay. And when using moving average, it have a certain behavior. But the most important thing that it is used to track the trending market one. Now, in the trading view, all right. Now, trading view is a trading software that is free, available online. And why I'm using trading view is because it is convenient, easier to use, and also helpful for beginner trader that you want to have the chart in your phone also can. Now, right now I'm in trading view on a daily time frame. In a daily time frame here, I go for indicator. I search for moving average. Then this thing will come up. Okay, I click into it. Then I will add 2 lines. I click 2 times. Then there's 2 lines here. Now, after that, you have put in 2 moving average in, right? You can just scroll. What happened? Okay, and scroll a bit. Then you can see there's line there. Let's start with something easiest to understand. Now, 10, moving average of 10. I put it to red color. Why 10? Have a guess. And then the second one I put 20. Why 20? Why I'm using moving average of 20? 10 is actually mean that this is a daily candlestick. One candlestick itself is equal to 1 day. And that also means that from here onward, right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 10 day. Okay, this is 10 day. And basically what it means is that based on this 10 day, the average price, okay, you sum up everything, the average price is at here. Simplest way, all right? And 20 means in the past 20 days from here onward, right? 20 days. Here. In the past 20 days, the average price is at here. Okay, the average price is at here. So that actually means that logical thinking, okay, apply logical thinking. If you are using moving average to calculate the average price, and if the price is above the average price and keep on moving above the average price, what does this mean? The price is higher than average. People are willing to buy at even more expensive than average. That means that the market have more buyer. Reverse engineer, if the people are selling below the average price, the seller are selling below it. There's no buyer want to buy at the average price. They want to buy even cheaper than average. That means that the market is nervous and they would like to sell at a lower price. There's more seller than the buyer. And that's come to entire formula already. Now, with that said, right, what does this mean is that when the price is moving above moving average, it is a good buy opportunity. When it's below it, it's a good sell opportunity. Above buy, below sell. For example, the simplest concept is that when you make a sell, it comes down, cross out, you make a buy, cross out, you make a sell, and so on and so forth. So over here, right, it have crossed down, and then cross down is like this kind of thing. So you sell from here all the way to when you have cross back up. Cross back up is here, so you close it here. So you're making a 6% profit like this. Second way is that it cross up here, right? So that you buy from here, goes up, and then come back down, cross below, and then you close here. Now, did you guys notice this thing? If you're using moving average, it's good, right? You can capture the trend from here onward. It can here all the way to here. And then you can from here buy all the way to here. It is good. But then, did you realize that you are profit from this much back to this much? Correct? You are selling from there to here, then from here to go up. You are missing out this portion of profit. And that is what I would suggest, my way of doing it. My way of doing it is that not to wait it to go so far away lah. My way of doing it is that I will just close a trade whenever it is crossing back. In a way, when it is just crossing toward, let me don't use this thing. Now, when it had crossed down, right, which is here. Wait up. You guys see this? Can see already? Yes, no? Okay, yeah. So I believe that you guys can see this pen already. So you see, I'm selling here, and then I am based on moving average, right? If I fully based on moving average, I'm closing at here. From here to here, it is profit lah. But then you see, this is what we call as the max profit. And here to here is a profit and missing out. And if we look like this, right, in a way that we are sort of like missing out 50% of profit, right? So from here, we are profiting around 11%, right? 12%. Come back to here, it's only 6%. About 50% of your profit missing out. And that's a way that you have to start to think that how to optimize this strategy. Now, there are multiple ways. For me, the simplest way is that I will close the trade, not very close, but as soon as it has just crossed the price of this moving average. Meaning that the price is the first time go above the two line of moving average. One of it. Okay, this is one. Second type is that doesn't matter one. As long as I reach to my target, let's say that my target is 6%. Anyway, beyond here, whenever the candlestick is big down, big down, like here, I will close already. Some people may think that it's not big lah, right? Size, hard to say one. So this is the second place. Question: would you guys close at 1 or you guys prefer to close at 2? All right, 1 or 2. 1 means you close at here. 2 means you close at here. 2 or 1. 1 or 2. Right, type it in the chat box, let me know. Got 2, Kevin is 2, 1, 2, 2, 2, 2. Got people is 1, 1, 1, 2. Which one is safe? Okay, good question. So guys, for those that type in 2, did you guys think that 2 is more safe? That's why you choose 2? Or 1 is more safe? Alright. Let me rephrase this question. For you guys to think, you guys can't think just because of safe. You have to be balanced on both. If I were asking you guys again, based on 1 and 2, right? Which one is more safe? Based on 1 and 2, which one is more safe? 1 or actually 2? More conservative, you can capture more profit. Alright, 1, 2, 1, 2, 1, 1. So you see, there is no right or wrong answer here. I believe that there are lots of professional traders in the room. Alright, there are experienced traders as well. In general, there is no strict answer for this because in the end, right, if in the P&L graph, right, for profit and loss, essentially 1 and 2, right, is the same price. Both of these can get the same result. Just that 1 is more conservative a bit. They wait until no, confirm already, like this one, not yet, wait, can come down one, come up, okay, cannot already, only exit. This is for the type of people that determined, strong willing to stay across. And this one, the number 2 type, is that they cannot wait. But this type of people are super good in sharp entry, sharp exit one. They can react very fast. Now, if you are the type of people that is like number 2, in out very fast one, and then you pick number 2, right, from here to here, exit out. Then the remaining 8 doesn't matter. This is not your profit. So this is 2 type of people. Now we give one more example. In a buy case situation, this is where you will buy. And then here when they have crossed down, this is where you will close it. Okay, then this is your profit. If just based on moving average. Now, second question, you may close at here when there is a big sharp, this is number 2. Or you may close at when it have crossed down both together, which is here. Alright, you likely close it here already. Or because this haven't meet your minimum boundary or right minimum requirement, so this thing may not happen. Okay, second type is that you may close it at here. This is number 1. Okay, both 1 and 2 have a bigger profit than original one. This is 2 and this is 1. Same question again. Did you guys think that 1 better or 2 better? 1 better or 2 better? In your own preference. I prefer to have 2. Okay, 2 because you guys can see the future can justify that this big candlestick. But for 2 you might close it earlier here. Okay, you might make a mistake especially for those that not fully experienced looking into candlestick size yet. You might close it here. 2 need a bit more experience, but when you have good in 2, you can capture it most at the peak. But if you have 1, mean that you does not need to have a lot of, you does not need to be a lot of strength or experience, because 1 just cross it right, just come down, close low. You can be more patient, more slow, and this can be easier to automate as well. Okay, easier means that less setup needed So in a way, this is a choice. Alright, you guys can fix to your choice first. Later we're gonna go in detail to explain how does this thing work. Okay. Now, after we know about this thing, right? Then you need to know that sometimes people told me that moving average does not work in a ranging market. How many of you actually heard of this thing? moving average does not work in a sideways market. This is sideways, right? Now, what I want to bring out the message that yes, it is indeed moving average does not work well in a sideways, but that is a question. How big is your sideways first? Like this sideways, right? Up and down, we take the minimum one. Up and down, minimum got 34,000 points. It is the sideways, but 34,000 points. Of course, we'll be profiting. But if you choose a ranging market like Euro USD, not so ranging, but go for gold market. Other than stock, I don't know which market that is ranging right now. Okay, I remember. So for gold market, right? Yeah, here. Okay, so this is the crude oil market, right? And if we have a look like this, now if you are trading moving average on this type of market, we say that this is hampo, hancho, die. Why? Because you sell at here, you sell at here, it goes up. Then you buy it here, it comes down. Then you buy it here, it goes up, down. It's like the size of it is so small. Can you see this? The size of ranging is just 135 points. There's no much pieces of profit that you can take from here. Hence, it's not suitable. Another case is that USD JPY. In daily time frame, right, you can see that there's a big chunk of profit here. But if you go to lower time frame, like 1 hour, then you have to be justified. You see, like this. You buy from here, okay, you buy here, it goes up, come down, you sell here, and then it goes back again, you buy again, buy, then close. You sell here, right, sell here, then it goes back up. This is what we call as noise. It should not be closed here. It should be closing here or even a better place, right? So what we will be doing is that we call this as a optimization, whereby right now, instead of using moving average of 10 and 20, right, I'm going to teach you a technique, a super powerful technique to make this better, which is increase the number. You see, when I increase the moving average number bit by bit, right, you're able to notice that what happened to the line. In a way, I am making the line more straight, right? More straight. You see, it is more like a linear line. And then it filter out the noise just now. Can you see this? Just now is in and out, right? Right now, just in all the way out here. More accurate. Then in, out. Now, the red color may be not good enough because you see, got like, still got this kind of cases, right? You see, in, out, wow, so ugly. And then this is where you do adjustment. Then cannot ma, 20 lor. Edit bit by bit lah. Okay, see, the more I adjust, the more that it actually making it better. Now, one of the way is click one by one. Another way is that you can scroll it. Okay, you can scroll, also can make the line much better. What is length? Now, length is equal to how many candlestick average. In a way, the more it is, the lesser the noise, the more the average of the price. Like just like you go to a supermarket, right? You take one counter average or you take 25 counter average price. So this is like 25 of the candlestick price. So you see, by doing like this, right, is it much better than just now? You buy here, it does not touch, it is always like close together. Until here you close off. Then you may sell here. Alright, you may sell at the top, then fell. Then you buy again at the top, then fell. Come down and then you sell again. You see, it's much more smooth. Right? It's much more smooth. Now, this is one type of moving average. There's another type. This is what we call SMA, simple moving average. There is another type, we call it as LMA, linear MA. Let me check. Okay, this one, moving average weighted. Now there are multiple versions of it, right? Of course, there is called as exponential moving average (EMA), which is good. But I would like to introduce about weighted moving average. Let me change this weighted to be green color. And then I use the same length of 30. Right now, you guys can see this blue line and this green line. Okay, this blue line and this green line. Which one is actually more, we call it as more straight or more well in present the trend? Lesser noise, more clear direction, can clearly see that it's up or down. Green or actually the blue. I mean, both is 30, right? 30, 30. Which one is clearer? Blue or green? What do you guys think? Green, right? So I add in the red color back again. And this red color I add in like, okay, so this WMA. This WMA. Okay, over here, right, you can see that if I also do the same thing, I increase the length. Of course, this thing you can do in any market and in any time frame as well. As long as you know how to tune it, you see it can be much more clearer in representing the trend itself, right? And this is what we call as a fine-tuning process. A fine-tuning process is very important to make sure that this strategy fit well to this market. And that is a part that we talk about in this moving average part. Now we are talking about moving average, right? Moving average got multiple type of it. Now you have SMA, right? The simple moving average. You have SMA, EMA, and then WMA, right? Which is the weighted moving average. Now based on these three, right? What we do is that we look into the past, right? We call it backtest, and then we optimize it. Meaning that here we change the setting to cater well to the market. Now, forgot to mention about backtest. Backtest is actually mean that let's say that we use back the simple one first. In TradingView, you can see this thing, moving average two-line cross. Okay, moving average two-line cross. You click this. This is what we call it as a strategy. Okay, a strategy. A strategy is whereby it have an input, fast and slow. Let's say that we put in 10 and 20. And then I need moving average again. This is 10. Now, what this thing means is that as long as there is a cross, is it correct? Okay, so whenever there's a cross up, it will buy for you, and then it stop here. Whenever it have cross down, it will sell and then stop here. So in a way, by doing this, you are able to see that the most basic one, whenever this strategy will work in this time frame or not. Like 1 hour, 10, 20 moving average, as simple as that. It will just sell, buy, sell, buy, sell, buy, everything. Whenever you will be profiting or not. And from here, bottom side, you can see that the result is profiting. All right. And if we change the time frame to daily, is it more profiting? Of course, right? Daily time frame is more profit than 1 hour. If I change to 5 minutes, will it be profiting? Oh, no. And by doing backtest, right, simply doing this, you can quickly identify that this strategy work or doesn't work in this time frame and in this market. Let's just put another example. What if I put a goal 1 hour? Is it profiting? Sometime yes, sometime no, sometime yes again. Maybe 30 minutes, 5 minutes, daily. Daily still work, other time frame doesn't work. 4 hour does not work as well, right? Because it keep losing here. How about S&P 500? Lose. Alright, not so good also. And this is what we call as a basic understanding first. Using a basic way, you can quickly identify that this strategy work or doesn't work. But the thing is that we are not doing this in the trading view lah, right? Trading view is just a quick way for you guys to see this. Now, what we will do, the next step is to go for MT4. Inside MT4, I'm going to show you guys how you can use this to do backtest properly. Now, this is MT4. And if you guys haven't downloaded it, do it later. Okay, do it later. Go to your strategy tester here. Okay. And then you should be able to have this thing pop up. After that, what you will be doing is that on the first row here, click on this button. You see this, there's Alpha Masterclass there. Over the Alpha Masterclass, click plus button. You will find a robot code as MA Lite. Okay, MA Lite. Click into this, then you can choose any market that you're interested in. Let's say that I'm interested to trade gold. Okay, I'm interested to trade gold within 2023 January all the way to right now. I would like to find the best settings that fit well for entire 2023. And from here, what time frame that I would like to use? Maybe H1 time frame. Then you key the spread for the gold market. Alright. Spread is like a cost for trading gold, and it's kind of fixed in the market, whereby you can justify from reading the number here. Now, this is what requires market watch. Okay, if you watch 0.3, you should know this thing. And market watch itself have this row called spread. And if you can't see this, right click out the spread. Then you can see the number. So it's 27. Let me just edit this. Okay, once everything is done, what I'll do next is that I click start button. Alright, start. Now, one thing very important is this model need to be control point. Okay, need to be control point. I stopped here for a while, and if you guys have any question, can ask me right now. Then we will answer some of the question first. Now, let me explain again what is the thing that we are doing here. Right now, we are at the stage of doing moving average, right? And inside moving average, we are doing back testing right now. And in the back testing, this is where we do it in the MT4. I write this down right, so that you guys can take note also. Now in the MT4, we use a thing called a strategy tester. Okay, this is back test. And strategy tester, for those that want to have shortcut, is Control plus R. You click the chart first, then you click Control plus R. After that, this thing will pop up. Okay, and then you adjust the height a bit for the first timer. Adjust height means you adjust this thing a bit. Okay, because first time, small computer will have this kind of problem. It can't see you. Yeah, drag this up a bit. Drag this up. After that, you find according to the setting. First of all, this place need to find for Alpha Masterclass MA Lite. If you can't find MA Lite, means that you need to go to Alpha Masterclass folder first. Okay, and the folder is just at this plus button. You have to plus this, open it up. If you can't find this, perhaps you are existing old batch of students, so you need to update the robot. This is a new robot, by the way, just to let you guys know, right? This is a new robot. It's called as MA Lite. And after you open up this thing, after that, you choose the market that you want to trade. For example, I'm using gold. Okay, I'm using gold. Third thing, model, control point. Just key in exactly the same. Number 4, tick the date. Choose from what date to what date that you want to test. Because we are doing back test, all right? After that, what time frame that you want to use? This is number 5, time frame. And next thing is spread. Beginner, all right? For beginner, this thing can just ignore. What you can do is that there is a current, right? Just use current enough for beginner. Okay, for experience, if you know what is spread, then you can key in correct number based on your broker. For beginner, if this is your starting, right, key in current first. One, two, three, four, five, 6, then 7, not start. Now, one thing very important is that you need to be aware that your result and my result later may be slightly different. Okay, may be slightly different. Why? Because this is the nature of back testing. Like you test the strategy on my computer, at your computer, even the same broker will have different data one. So my result and your result may be a little bit different. And how to download the data, there is a membership portal to explain it in details on step by step, but I won't explain here. Right? Later I'll show you guys where to get it. And after you get done, right, this green bar will complete, and then it will show you a graph like this. Okay, in a way, I'm start to trade from 10,000, lose money to here, and this is a report. Now, over here, forgot to mention one thing. Because moving average is a low frequency trading, in a way, it is a low risk strategy. A low risk strategy itself, you have to drag a longer period of time. Let's just put it 1 year, from 2020 to from 2022 to right now. I run it again. And we can see from the graph, it is not performing well, correct? That is the basic of moving average. If you use a basic strategy, it is like this. You go to report, it have a result. Now for us, let's take a screenshot. Over here, this report, right? What are the few parameters that we will look at? First, of course, net profit, straightforward. This equal to the profit that you are earning. Second, we look at the maximum drawdown. There are two numbers there. One is the drawdown in dollar. Second one is the drawdown in percentage. Next thing, we look into profit factors. This one. Rate factors, in a way, you can call this as a risk reward in the simplest way. And any number beyond 1.5 is, we call this as a god level of trading already. So if it's below 1, means that it's losing money, all right? And basically that is what most of the time we look at, just 3 metrics: 1, 2, and 3. In the event whereby you want to show off to your friend, okay, it's only when you go to put this one. This is what you call this as a win rate. But by day 2, I will explain to you why this number really does not matter. Okay, just for now, you just need to look at 3 numbers: how much you make profit, how much you have lost in losses, alright, drawdown, how much you are lost, and then what is your potential risk reward. Put into human terms, profit is like how much you can make in money, and drawdown is that how much maximum that you will be losing. Profit factor is like $1 you spend, how much that you can make it back. So far, is it clear? Right, if it's all clear, can type a clear in the chat box, or if you get any question, can type in, let me know. Or writing not clear at all. Very good. Where should I get started? Where should I repeat that? Okay. Profit means, simple way, money you make. Drawdown and profit factors. Profit per $1 spent. Okay. What again the purpose of backtester, sir? Now, the purpose of backtesting, the thing that we're doing right now, is to know whenever that when you use a moving average strategy, it will be profitable or not. Okay? Why we are doing this is that, why backtest? Is to know if, okay, if a strategy, right, of this, in this case, if moving average profit or not. And this is the time that you put in, right, in this period of time, from a date to a date. Whenever moving average is profit or not from a date to another date. Okay? Maximum drawdown must be more than 1. So this maximum drawdown, alright, is mean that the potential max losses. So right now, I'm having initial capital of $10,000. I'm having initial capital of $10,000, and maximum I have ever lost $389. That is equivalent to 3.84%. I have ever lost 3% of my account at one single point. Maximum that I have lost this much. So, yes. Potential max loss is set by us? No. So this potential max loss is calculated based on from 2022 all the way to 2023. Okay, from 2022 to 2023, during this period of time, this is how much that it have lost in the past. Okay. Uh, Now, this thing itself is what we call as entire backtest process. All right. And okay, and this thing is over here. All right, backtest is over here. You need to open this button. Okay, I should take a screenshot of this button at the top. Okay, that is the button. This is the button to call this out, backtest. And then you can have this terminal here. Okay, when you have this terminal here, you can call this out everything. Okay, and that forms the entire things of the backtest flow first, right? The basic first. How long of a backtest period usually be used? 1 year, 2 years, or 5 years? It depends on the strategy. Okay, it depends on the strategy that you are using. Whenever that you would like to trade for 1 year, then you use 1 year. You just want to trade for 3 months, short period trading, then 3 months. By period means that how frequent that you would like to withdraw the money. Don't tell me that it's like 1 week lah. Minimum 3 months. Minimum 3 months, maximum 2 years. Don't go beyond that. Alright? And the period is equal to how frequent you would like to withdraw the money. Okay, how frequent that you would like to withdraw the money. Marcus, how to predict in the live market? Later. Okay, later. How do we apply backtest outcome to the current real market, sir? How to apply? Before I go forward to apply, we have a second step first. You have backtest, you need to go for optimization. Can I move on to optimization for now? All right. For those that don't know yet how to do this, all right, basically this step we have already explained this in the membership website. And if you haven't watched, maybe after the session, right, you can take your time in the lunch to watch the at least 0.3 so that you can understand what is the basic of MT4 navigation here. Okay. Is it okay? I move on right now, right? If it's all okay, you can type okay into the chat box. And then I move on first. Later, you can watch back the recording. All right. Thank you. Now, in the membership website itself, okay, in case that you guys don't aware, there is a section called as section 4, all right, basic robot trading. And over here we have MA Lite, and documentation here we have MA Lite as well. Now, what I want you guys to do right now, and no, not now. Listen first. Okay, just take note that there is this thing, MA Lite. And from this MA Lite, you click here to view this. Because moving average, we have multiple settings involved, such as when you come into this expert property, right, there are multiple settings that you can adjust. Now, what is these settings? This setting is what we call this as a box. Okay, and it's a box with password on it. Every single market have a password, right? Every single market have a password to it, and you need to know what is the right password to go into that market with the correct setting. Setting equal to password. Hence, you just need to key in the right setting here according to what has been mentioned. Okay, key in the setting, and then from here onward, right, you are able to find what is the best setting for the market. Let's say that the market that I'm interested just now is gold market, right? So what I do is that I key in all the value here. So I key in the value as example. All right. I key in only, all right. You guys can key in later after lunch. I mean, during lunchtime. I key in as a demonstration. Okay, done. Now, once I key in everything here, I just take a screenshot. Okay, double check a few things. You key in correctly or not. Okay, does not need to think anything this one. Just key in the number. Okay, just key in. Just make sure that this has been ticked. Okay. Then, okay, tick this one. Then start. Now, what is the thing that I'm doing and why I'm doing this is this thing is called as optimization. And purpose of do optimization is to find the best setting. And this best setting will lead to best profit. Okay, for best profit. Is it the same by default? Should be the same as by default. Okay. How do you call up this page? I call this page from this button, expert properties. Okay, expert properties. You are using H1 time frame to backtest? Yes, I'm using H1 time frame. Okay, H1 from here. So over here, now it saves you a lot of time to struggle a lot. Here it gives you a list of settings that is like these are what we call as different settings, different profitability of the market, right? And from here you can choose the profit that you like to use. Okay, here you can choose any profit that you would like to use. You stop first. Alright, you should not stop, alright. You guys should not stop. I just stop it to demonstration purpose. Right now I can sort it according to profit. Let's just say that I usually don't take the best one, right? The best one usually too good to be true. We have picked someone in the middle. Let's just say I take this. I can double click and show you guys. What if that I got these settings to perform in the gold market? Is this a good result or not? Yes or no? Yes, right. And you guys can see, right, the differences between initially and right now. Initially, we back test first. Back test, see how it worked in the past. Back test, it shows us that how it worked in the past. Basically, the result is like that, right? And then we enter into a process called as optimization. And this process gives us the result that in the past it become like this. Then the thing that you are seeing right now is that this has been verified. It's good. Okay, everyone agree that this is a good result. Then we take this result to apply to live. You guys get the flow. The flow is that you tested in the past first. Then you know that it's not working already. Not working, then you find the best setting from optimization again. And from this best setting, you found that, hey, this is a good setting. Then you apply into live market. Okay, right now we are at second step. I would like to move on to the third step, which is that after I got this setting, all I need to do is to export properties, save the setting. I can save it in any way. Okay, I save in the desktop as test first. Okay, save it. Okay, so this is a new setting. Doesn't need to care what is the number, alright, just save it. Okay, already. Just now I'm trading in Gold H1. Okay, Gold H1. Follow first, follow first, don't do your thing, follow first. Just now I have saved my setting in Gold H1 and I now open the chart of Gold H1. H1. Click this button, scroll to the end. Now the tab beside, we go to Navigator, Alpha Masterclass. Okay, inside Alpha Masterclass, find for MA Lite. After MA Lite, drag and drop input. Wait. I missed out one step. So in H1 time frame, right? In H1 time frame, first is this auto trading. I have to emphasize auto trading first. Okay, auto trading first. Green button first. Okay, must be green button first. Then only drag in. Then only go to input. You load the setting. Okay, the setting that I set is test, right? Test. Then okay. Okay, then okay already. Mean that right now you see this MA Lite is in the chart with a smiling face over there. Okay, we have a smiling face over there. That complete the flow of entire process. Three steps. One, backtest, go for optimization, go to live. And basically live is the last step of the robot trading already. Okay, this is the trading part, right? Now we have reached today. Live on demo first? Yes, of course. All right. Now you guys can open up, you guys can put out the question into the chat box and let me know that is there any part that you guys would like me to repeat. All right. In the gold basket equity graph example, right? At the time, it takes a while before the new high are made, hence roll up. In the equity curve, in live trading, how do we have confidence that the strategy is still working in the drawdown period? So in a way that you have to know, I think that Bhutia Ganeshan, all right, I guess you are more experienced, so I'll answer this based on more experience. Now, of course, when you guys ask a question, you need to be justified that you are. I mean, you guys haven't filled the form, so I won't check it. But when you ask a questions, when you are more experienced, of course, I will answer more toward experience type. And you are more beginner, then more beginner, so that you guys can understand from that level onward. All right, want to make sure that this thing is clearly solve the problem that you are having. So in this go back test, right, you guys can see that the graph looks something like this. And how do we be confident that if the result is going to be moved forward in the future? In a way, we have been tested this strategy, and this strategy has been performing okay for the past period. And the past period that we mentioned is here, right? Between 2022 all the way to 2023 April. How can you confirm that the next few months is like this? Which is all the way to like maybe 2023 December. Now, the answer for this is that we also cannot confirm 100% this thing will happen. But what we can confirm is that at least within 1 month period, this thing will happen. Meaning that until May, this is likely to be profitable. Why? Usually a strategy can sustain at least a month. At least a month. And average is sustained over 3-month period, which is right now is April. 3 months later is July. After July, you have to redo the entire process again. Make sure that from this date to maybe this date onward is profiting, so that you can only ensure that the later part is profiting. In a way, market change, setting change. When the market have changed, the setting need to change. That's why we do the process again. So in a way that you have, right now you have backtested ma. Next time, you just need to reverse to the optimization, go back to live market again, and just keep that cycle happen. And of course, you cannot simply choose the best setting. Okay, later by day 2, I will explain in more details how to filter the setting in a more accurate way and how to find the real setting that is profitable. For now, this is the basic. How to screenshot? This one you can Google around. There is a YouTube video to show this. The EA, after I click start to run, it hang. Should I stop? Yes, you should stop. And then you contact BMO about to double check that what happened to your MT4. So it means that if the market looks not good, mean that it's unverified, should we look for other pair? Is it? If the market looks no good, means that it is unverified. Okay, in a way, let's say that this strategy, that why I said that this is verified, right, is because if I choose other setting, for example, because gold is quite easy to be profitable. If I choose other setting, like let's say like, right, I choose the one that with a biggest drawdown one. Okay, so like this, especially this kind of graph, right, which is a good example. You see, just now it's like growing up. This one is like down, 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 down. Can you accept this or not? Yes or no? Right? If this is your result, right, in the past, would you accept this kind of result? Yes or no? Like it going up, then down, go up, down, down, down. A lot of downside movement one. So the answer for this is actually no. We try to avoid this kind of result as much as possible, but there are certain robots that need to have this kind of result in order to be long-term profit, which I'm going to explain in a moment. But basic wise, we try to avoid this, and if can, the upside move and downside move need to be balanced. Okay, need to be balanced. How often that we need to backtest plus optimize after going live? Average 3 months. Average 3 months. So meaning that once you have completed this cycle, right, you only repeat this 3 months later. Okay, 3 months later. So yes, every 1 month backtest, optimize it, and apply it to the live market again. How do we get the setting again? Need to adjust input manually. You just key in accordingly. Okay, you just key in accordingly to what I have been showing just now. Okay, use export properties. Is the every 3 month optimizer cycle for one is depend on, right, what time frame they're using. So if you're using 1 hour time frame, then you do it on every 1 hour lah. All right. Okay, so with that said, that's for the first part of the session. Just now that you were talking about the password for each market, can show again. Now, the password is here. All right, in the membership website, you can find this thing. And over here, you are able to find, sorry, here, 4.C, 4.C, MA Lite. And inside MA Lite, this is the password. When you click into here, it has this thing. The start, step, stop, right? Start, step, stop. Just key it accordingly. And key into wait, key into expert properties, start, step, and stop. All right. So with that said, let's have a 5-minute break first, and then we come back.